stocks which are on our radar. Let's now talk and take forward a corporate discussion. Stanley Lifestyles reported its Q2 numbers, where revenue growth was soft. EBITDA rose 34% versus last year. The company also saw its margins expand. Sunil Suresh, who is the managing director at the company, is joining us now to understand the outlook going forward. Mr. Suresh, good morning. Thank you so much for joining in. This time around, your revenue growth was soft, 2.3%, that is in Q2. And even in the first half, it's around 5%. More than 5%. Can you give us a sense of what the full year target is and what was it led by, this softish revenue growth in terms of volumes, maybe pricing, if you can break that up for us?
Sure. I think post our IPO, we have been involved in a bit of what I call as the plumbing changes as far as the company is concerned. So that's the kind of results we see. We are much healthier in our EBITDA and our gross profit levels. Also, our PATs have increased. So we have not really rushed into opening the stores. We have been a little more measured because the rental expectation of the landlords was very high. And today, I think we have been able to get good real estate deals, and our expansion as far as this year is concerned, we are on track for that. So we believe that we are now positioned for a better, more healthier growth going forward. That's where we are positioned. Yeah.
What is that healthier growth, Mr. Suresh? If you can put a number to that, will it be high single digit?
Yeah, in terms of, I think, where we are pivoting from a typical, sofa-dependent furniture brand towards a complete home solution. In our premium line also, we have launched our full home solutions, and the first pilot store has already been showing us very good results. We're expanding into that. So in terms of where we are going to go is keeping in mind our long-term plans.
Sure.
Currently, we are at about 73 stores. We want to take it up to about 120 stores, and that's where we are progressing.
120 stores by when?
Next 24 to 36 months.
2 to 3 years. Just some numbers, Mr. Suresh. This current quarter's revenue growth of 2.5%, can you break that up into what was it on account of company-owned, company-operated, secondly, B2B, and thirdly, the franchisee model?
Sure, yeah. We have shown a significant growth in our company-owned, company-operated stores at about 60%. Our franchisee-owned, franchisee-operated stores, 10%. And other businesses, including B2B, is about 30%.
No, that is what the revenue contribution is. Can you tell us what has been the year-on-year revenue growth in COCO, in franchisee, in B2B? And also, do you hold on to the 1,000 crore revenue target by the end of 3 years?
Absolutely. So end of 3 years, our target is to reach the 1,000 crores with a 15% PAT. We are up in our COCO stores by about 23%. Compared to the last year.
And B2B and franchisee?
B2B, the FOFO stores, we are down by about 6%. B2B, we are down by about 5%. Franchisee, we are down by about 5%.
Okay.
Mr. Suresh, what has been your same-store sales growth for the first half of this financial year? And your retail sales, it's 70% of your overall top line. What is the kind of trajectory that you're penciling? Does that remain at 70%, or are you looking at expanding to other verticals as well?
No, I think broadly the ratio will remain, but what it is we are not a typical retail format, and we really don't go by the measure of same-store growth. What is actually happening is the average ticket size of customers spending with Stanley. Roughly about 4 years ago, the average ticket size was about 2 lakhs. But now pivoting into complete home solutions, the average ticket has jumped up to almost 15 lakhs. So thereby, there is a kind of a very different matrix that we are following. So idea is very clear. Both our luxury and premium formats have now moved into complete home solutions. Our value premium is still in the furniture concept. That also will change in a year or so. But ideally, all the three formats by 2030 will move into complete home solutions. So the macro market for us, when you look at what is happening in the housing industry, you must understand that there has been a significant, almost a 70% rise in the premium home market. So if you look at RERA today, last 3 years, if you really study RERA, there's a huge development in the premium housing, which is above 1.5 crores, almost a 70% jump.
Okay.
So new home for us, it is always the new home.
Right.
In India,
So, Mr. Suresh, that is a theme that Stanley has been playing for a while, right? The premiumization, that what you're seeing in real estate as well. So that's the India story. Why are you expanding into international markets? You plan to have 8 stores over the next 3 years in Sri Lanka as well. So what's the strategy here? And why do you have increase in assets between March 25 and September? Because other financial assets have increased to 150 crore rupees versus 92 crore rupees.
So part of our expansion plan is to start entering nearby markets, especially if you look at it, our plan for next year is Sri Lanka and perhaps Jakarta. Once we have our presence in 3 countries, our target is to also enter Middle East market, especially the Saudi market, because there is a law there that we need to have a presence in minimum 3 countries to go the COCO route. So we are expanding in Sri Lanka and in Jakarta first, and then we will target to go to the Saudi market, where the buying power and the kind of designs that we develop has got a great opportunity to grow.
Thank you, Mr. Suresh, for joining in. That's Stanley Lifestyles. The last couple of quarters has been tough for the company. In fact, I was seeing the last 6-quarter performance. In 2 of the quarters out of 6, it was a negative revenue growth. And in the balance 4 quarters, it was a mid-single-digit kind of a revenue growth. That said, the company believes this period was a bit of a plumbing period, and they're on track for achieving 1,000 crore top line by the end of 3 years and 120 store addition in the next 2 to 3 years. PAT margins seen at 15%. Get into a break. Crypto markets on the other side with Manisha Gupta.